billion investment in artificial intelligence doesn't go far enough. That's according to one professor who says Canada's plan to invest almost all of the funds into computing power doesn't bring it close to competing with other countries. Let's bring in Joel Blit. He's a professor of economics at the University of Waterloo. He and a colleague recently published a paper published an article on this subject in the Globe and Mail. Joel, thank you very much for joining us. You and your colleague write that just days after Ottawa announced its $2.4 billion investment in artificial intelligence, that investment was made obsolete by an announcement from Meta Platforms, the Facebook company. Tell us why.
Yeah, I wouldn't say completely obsolete, but at least partially obsolete. The big picture here is Canada needs to decide where we want to play in the AI tech stack. And at least for me, I think we very clearly need to play in the application layer. The reason why we argue that it has largely made Canada's investment obsolete is that Meta Meta has amassed about $30 billion worth of computing power. And $2 billion compared to that is just tiny. It's just not going to be enough to play in that space. So that's the first point. The second point is that Meta spent a bunch of money creating Llama 3, its large language model, and they gave it away for free. So they made it open source. And so it's going to be very difficult to compete in a space where you're competing against someone with very deep pockets that is open sourcing what they're creating.
Joel, if I could ask sort of an adjacent question, it does sound like, having read your op-ed piece recently, that the criticism is sort of that maybe this was well-intentioned, but broadly speaking, you could paint it as too little, too late. And I'm wondering if you could sort of compare or contrast your views on other recent budgetary initiatives intended to address revenue, but maybe that will have unintended consequences for capital formation and startups. And in particular, I'm referring to the changes to the capital gains inclusion rate for large capital gains and corporations. Certainly, we've heard the tech sector come out and roundly criticize that. And I'm just wondering what your thoughts may be on that and how it might sort of dovetail with this investment spend that they've announced.
Yeah, it's... very clearly the tech community, as you said, is against it for the simple reason that when you create a startup, you're making lots of investments with the hope of a big payout at the end, which obviously would now be taxed at a much higher rate. At the same time, we do have a lot of debt. We have a significant deficit, and we need to raise more funds. I'm not gonna go into where we need to raise this money. Clearly, they felt that this was a place where they had to do it. I can really see both sides on this, so that's not something I want to jump on.
Okay, on AI, what should Ottawa do if they were to accept your view that this is, I believe, too little and focused in the wrong place? What would a proper support package for artificial intelligence development look like in Canada?
So I think we really have two options. One is to take this $2.4 billion and reallocate a lot of it away from computing power and towards the kinds of investments that would help us succeed in the application layer. The other option is to say, okay, we do need to invest to some degree on computing power, so let's have a fresh package that really tries to aim at this application layer. And for this application layer, what we really need are three things. We need to be driving mass AI literacy across this country. We need to be training as many people as possible so that people are aware of the technology, know how to use it, are able to adopt it in their everyday work. We also need to target companies and make sure that companies are using this technology to become more productive, more efficient, to build better products. And largely, we need to make sure that we are targeting entrepreneurs so we have more AI-centered entrepreneurship. To be fair to the federal government, they are spending $300 million on this front. I just think that's just not nearly enough because this is where the big opportunities are going to be had.
You and your colleague mentioned France as perhaps a model here. France has partnered with Microsoft. Tell us about that and what kind of a template that might provide to Canada.
Yeah, so that's the other big development from last week is Microsoft announced a really big, so €4 billion investment in France Again, part of that is to build infrastructure because, I think we do need some degree of infrastructure, computing power, et cetera. But a lot of that as well is to train people. So for example, they have a goal that over the next 3 years, they want to train 1 million French people on how to use AI. So I think, and they're also targeting to accelerate about 2,500 startups in the AI space. So I think it does two things. I mean, number one, it shows that by partnering with private entities, we can probably get this done a lot cheaper in Canada. And so I think that's a model that we should be looking towards. But secondly, it's showing the importance of not just investing in compute power, but investing a lot as well in, again, AI literacy, training, getting every Canadian on board, because that's what we need to do. We need to empower every Canadian to take advantage of the technology.
Thanks for a good